Alright, welcome back folks. In this video we'll go over the Virgin Wick Theory setups. Some nice setups over yesterday, Monday. But real quick, before we get into those, some community wins. So shout out to Damien for passing his Lucid Flex eval. Shout out to Brutal Curse, who just got a $4,000 payout trading Virgin Wick Theory. Very nice. First time hearing from this guy actually, but yeah, very nice to see. And shout out to Brain No Work for Name, who just passed a Lucid account and an Apex account, trading his own style of Virgin Wick Theory. Very nice. But if you're new here, this is Virgin Wick Theory. So on the higher time frame, we wait for Virgin Wicks, which is untouched wicks, to get closed through. In this instance, to get closed through bullishly. Then we drop down to the lower time frame, wait for price to trade below that point of interest, which was created by that Virgin Wick level, into a higher time frame fair value gap. Then we take a change in state of delivery long or an IFEG long. But I've also got a free PDF linked below every video where you can study the model in further detail if you are confused. But we'll start with NQ. All right, so this was Sunday Asia Open. This was the one trade that I took for the day. I had one trade, one win. So this is actually on the 2 hour, 2 minute time frame. Like I've said before, the model is fractal, meaning even though the base model, we trade the 1 hour Virgin Wicks and 1 minute entry time frame, you can just extrapolate that out to other time frames. But of course, I do not recommend doing that unless you have more experience with the base model, because it can get confusing. But anyways, so, okay. Let me go on the 2 hour time frame. So we have this opening candle here, which actually closed below all of these Virgin Wicks, creating our bearish points of interest. So these are bearish POIs. So then we can drop down to the 2 minute time frame and wait for these POIs to get engaged. So I'm just going to remove these because they are already automatically drawn by our CCT indicator, which I've set to the 2 hour time frame. And so step one is POIs get engaged. Yes, they have been engaged. Step two is higher time frame FVGs get engaged. Yes, we have a bunch there thanks to this gap. And then the third step, I'll just hide that so it's cleaner, is simply a CISD or an IFEG. And here there is a CISD because we have a stop hunt here. And this stop hunt, or this liquidity hunt, whatever you want to call it, was done by this leg. And so in this leg, you want to look at the highest up closing candle, which is this one. But, oh sorry, it's this one. And you want to look at the opening price, which is right there. So there is your change in state of delivery, as I've marked off. And so after this candle closes below it, you can then set your order there, stop at these highs, targeting 2R, and bang, there you go. So that was my win for the day, a nice 2R on this trade. And then that was it for the day for me, but there were some other setups, especially in New York, which I do not trade, but I'll go over them anyways. All right, so this is during New York, Monday, 2nd of March, 8 AM candle. So we have a bearish point of interest, which has been plotted by our CCT indicator. This is the 1 hour POI, and we are on the 1 minute time frame. So POI gets engaged immediately, that is step number one. And then secondly, we want to look for high time frame FVGs. Nice, we have some up here. Bang, we also tap into some other ones up here as well. Now we are just looking for either a change in state of delivery or an inverse fair value gap. And there is your CISD, because let me just turn off this so it's cleaner. We have a swing higher here defined by a 3 candle pattern, which the middle wick has a higher wick than the ones next to it. And we get a sweep of this swing high, which is done by this leg. And so in this leg, you want to look at the highest up closing candle, which is this one. But it is consecutive with this candle, so you want to look at the opening price of this one, which is there. So there is your change in state of delivery. So upon this candle closing, that is your confirmed entry model. And you could set your limit order here at the CISD level. Stop at these highs, targeting 2R. So this is A+ for me. I know some people were saying that this one is quite far overextended past the POI. But actually, I've done some testing on this theory over the past weekend and even the weekend before that. And I've found from my testing that being overextended past the POI doesn't make too much of a difference, maybe a few percentage points to the overall win rate, but I've concluded that it is not enough of a difference for me to not take overextended POI trades. So for me, this trade is still A+, and I would take this any day of the week. And it ends up playing out, so yeah, pretty much a 0 drawdown, and very nicely goes to TP, taking out that draw on liquidity. Yeah, so hopefully some people caught that one. I think a few people in the Discord caught that one. There was also this very nice setup on silver, again during New York, but a bit later. This was 10 a.m. on the 2nd of March. Yeah, hopefully you guys have seen my update on silver and how we are adding it back to the watch list now, and it has been very clean. So here's a nice example. So this was 10 a.m. We have all these bearish POIs to work with. So step 1, we have POI getting engaged. Perfect. Then do we have higher time frame FEGs? Yes, we have a bunch here. Perfect. Then we are just looking for an entry model, so either a CISD or an IFEG. Nothing yet, nothing yet. Still waiting, still waiting. Bang, there's your IFEG. Let me just clean this up a bit. All right, so here you have a confirmed inverse fair value gap. So that is step 3 of the 3-step process. And that is your confirmed entry model. So if I was trading New York, which I do not because I was sleeping, I would have taken this. And so upon confirmation of the IFEG, you can enter in there on that close. Stop at these highs, targeting 2R. And bang, you even get a second chance to get in here. And that goes to TP in like 4 or 5 minutes. Very nice. So yeah, hopefully you guys have been watching silver and you caught this one, because yeah, silver's been quite nice lately. Speaking of silver, there's one other setup I want to go over just to finish off this video. There was a successful silver long during Sunday Asia Open. So let's go over this one. Okay, so it's Asia, 8 p.m. Okay, let's start with step 1. We have a bullish POI. Okay, by the way, this is the 2-hour, 2-minute time frame. So my CCT indicator is on the 2-hour time frame. So we have a 2-hour point of interest here. We actually have 2. And I am on the 2-minute time frame. Again, I would not recommend looking at this time frame alignment unless you are already very comfortable at the 1 hour, 1 minute. Or you could even just learn the 2-hour, 2-minute. It's up to you, but just stick to one at the very start. But yeah, we have a bullish POI. It gets engaged. And we actually do have an inverse fair value gap confirmed very early on. But Like I've mentioned before, we do not want to take trades in the first 10 minutes of a POI being created. But in this case, it would be the first 20 minutes because we're trading a 2-hour POI. And yes, this is statistically confirmed that I've tested it myself over many trades. The very first portion of a POI, the probability of a win is just a lot lower, enough for me to stay away from entries that occur in the first 10 to 20 minutes of a POI. So we would ignore that and then wait for another setup. So we go further into some bullish higher time frame FVGs, which is perfect. And now we are then just waiting for either a CISD or an IFVG. And I believe we get an IFVG. Yeah, right there. So there is step 3. We have high time frame FVGs, we have bullish POI engaged, and we have an inverse fair value gap. And I believe there is also a change in state of delivery right there as well, because as you can see, we get a stop hunt here. That stop hunt was created by this leg here. And in this leg, we want to look at the lowest down closing candle, which is this one, but it is consecutive with this one. So we look at the opening price of this candle, which is right there. That is your change in state of delivery. So when you get a CISD and an IFVG confirmed on the exact same candle, that is a super, super strong A++ entry model. So you could just enter in straight away right there. Stop just below the entry candle, but you can even give it a bit of breathing room. Something like that feels right. I wouldn't want to go all the way down there. That feels a bit too far for me. But something like that, targeting to R, is perfect. And bang, goes to TP eventually. Very nice. So that was it for this video. Some pretty clean setups over Sunday/Monday. Hopefully you caught some, and I'll see you next time.